All right, Candle Range Theory Trader, back with you with another video on how to trade the daily range, Candle Range Theory. So let's get into it. We're only trading one daily candle. That needs to be your focus, okay? You're not, it's just, this is so simple. Please do not misunderstand anything I'm about to say, okay? So we're going to just trade the traditional Candle Range Theory setup. It's a 3 candle pattern, and we're only focused on trading candle 3, okay? Now I'm going to go through each day of the week to show you what to expect, but it's the same pattern over and over again. So this is what you're going to look for. If Monday is your prospective candle 3, then this is the pattern that you're looking for on the daily chart. Thursday should be this first candle, okay, the range candle, this blue candle here. Thursday should be something like this. Thursday creates the high and the low. Candle 2 must be Friday. Friday must poke above Thursday's high and then close below it, or inside of it rather. Obviously all of these are going to show a short example, but for longs, you just flip the chart upside down. The rules are same. It pokes below the low, close inside. Okay, but all these are short, but same difference. Okay, so Monday in this case is our trading day, but we don't trade Monday unless we see Thursday and Friday do this. So this is a 3-day setup: day 1, day 2, day 3. So if you're going to trade on Monday, the prior 2 days, no more, no less, is all you're looking at. You're not looking at last Wednesday. You're not looking at charts from 2 months ago. 2 days prior. That's all you look for. Okay. So if Tuesday is candle 3 that you want to trade, so you come to the chart on, let's say, Monday night coming into Tuesday, you need to see Friday creating the range, Monday creating candle 2. And I forgot to mention on the prior chart, but all of these as well. The key thing with candle 2 is this: when you're trading the daily chart, candle 2 must create the high or low of the week. All right. That's the non negotiable. Same thing. Let me go back to this prior slide. For this setup, if you're trading on Monday, special catch for Friday. Friday should be the prior high of the week. Okay. So that's how that works. Okay. If it's not the high of the week, I'm not interested. That's me. So once again, if you're trading Tuesday, Friday, Monday, and then Tuesday, looking for a straight drop. If you're trading on Wednesday, okay, I think you're getting the pattern now. Okay. Monday creates the range. Tuesday creates the high of the week, closes inside of Monday's range. Wednesday, you expect expansion to the downside. If you're trading on Thursday, okay, Tuesday creates the range. Wednesday creates the high of the week, closes inside of Tuesday's high. Thursday, you're looking for a straight distribution down. And then last but not least, if you're trading on a Friday, Wednesday creates the range. Thursday creates the high of the week, high or low. Okay, but in this case, the high of the week closes inside. Friday, straight drop. Okay, so this is just a simple little chart. If you want to take a screenshot of this, whatever. Okay. But obviously, if you're trading on this day, you're looking for the range and then the higher low of the week. So anytime I trade on Monday, Friday must create the higher low of the week. If I'm trading on Tuesday, Monday should be the higher low of the week. If I'm trading on Wednesday, just the day prior. Okay. If yesterday creates the high of the week and closed inside of the prior day's range, okay, candle 1. So it's candle 1, candle 2, and then candle 3. So Thursday feeds into Friday, and that sets up for Monday. Friday feeds into Monday, that sets up for Tuesday. Monday feeds into Tuesday, it sets up for Wednesday. Tuesday feeds into Wednesday, sets up for Friday. That's the trading day. And then Wednesday will set up Thursday. You're only trading on Friday, and that's it. So important note, okay, you must establish a cutoff time for taking these trades. Typically, I'll take a trade as early as like 7 o'clock p.m. Eastern Standard Time. Okay. Typically, I like to see price starting to trend in early Asia no later than the London session. So I'd say typically around I'd say like 4 o'clock at the latest. Sometimes it can go up to 5, but here's why I say that. Take a look at this candle right here. Hold on, let me go back. Okay, take a look at this candle. See, the open price is right here. This is at 5 p.m. Eastern Standard Time. It went up just a little bit, but for hours, for a 24-hour period, price should be moving in your direction. So all you have to do is just catch this part up here, and that's it. If you can get in anywhere around the open price or the high of the candle, then the rest of the day should be spent looking for profit, right? So that's why I say that. So it shouldn't look like this. Okay, your daily candle, this candle should not look like this candle. This is the candle that you want to see. All right. So let's see where I leave off. Sorry about that, but I had to throw that in there. But yeah, the timing aspect is very important. If price isn't starting to pay you out If this isn't starting to move in your direction by like, I'd say 6, 7, I would, 6, 7, 8 o'clock or so, I would say forget it because it just might be another consolidation day and that can happen. All right. That can and will happen. So let's see here. And as well, I like to see, I try to take entries on the 5-minute chart. I like to see fair value gaps as confirmation that the momentum is increasing. So you don't need any indicators for this. A fair value gap is just based on price action. So I wouldn't even call that an indicator. It's also important to note, like I said, candle 2 must close inside of candle 1's range to be valid. So it's not enough for candle 2 to create the higher low of the week. Okay. It has to close inside. It's just a false breakout. So I'm going to give you 2 quick examples, one long and one short. So this is a whole week at a glance. This just happened this past week is where I'm getting these charts from. So this was Canadian yen. You have candle 1, which was Wednesday. Tuesday created the low. I'm sorry, Wednesday. Thursday created the low of the week, closed inside of Wednesday's range, and then you just get an expansion to the upside, and that's it. Okay, see how I spent most of the day paying you, and it did retrace. So obviously you want to, get your profit the best you can. But now let's take a look. This was Friday, so let's take a look at our best entry. The best entry was around 7 p.m. Eastern Standard Time. What I look for when I trade daily ranges is the first fair value gap. That to me confirms that holds. Okay, it needs to hold. The first fair value gap off the low or high of the day tells me, okay, there might be some momentum in this trade. And then typically, if it can retrace into the gap or get near enough to it, I'll go ahead and get in, and then start scaling in and going from there. So this one, remember, the earlier you enter a trade, the earlier you may have to exit. So this was this today? I think this was today, and if so, this was non-farm. That's why this big spike happened up here, but then it just retraced. So at the end of the day, you want to be sure to get in as soon as you can, and then get out like around London or so. And then last example here, you have Monday creating the range, Tuesday high of the week, closed inside, and then just a straight drop. Okay, so that was that. Now, the entry for the 5-minute chart was at 2:20 a.m. 50 pips. It did drop by 4:40 p.m. So this was an all-day candle where it just, it spent all day dropping. But because that entry was so late, it got in around 2:20, right, which was much later than the one that it shows you, which was at like 7 something that night. This was at 2:20 the following morning. But like I said, like around 3, 4, somewhere in there, you want to start seeing price start to drop off the higher low. You shouldn't see it drop and drop or consolidate and consolidate like, from 5, 6, 7, 8, and it's still chopping around. That's not it. That pattern, that type of price action is not consistent with an expansion candle. Okay, so you have to study the behavior of the candle. All right, so in conclusion, this is the basic guide that I mapped out for you. I didn't leave anything out. That's the whole thing right there. That's all I do when I trade daily ranges. Okay. And I've gotten payouts, withdrawals, all of that from doing exactly what I just showed you. Okay. If you know how to manage risk, that's what kills most traders, being greedy. Then if you can do that, if you can manage risk, you'll be okay. And you can have some big winners and some small losers. But this is ideal for people who work and may not be able to trade during the day. You can trade these at night during the evening, like around 7, 8 o'clock at night, Eastern Standard Time for folks on the East Coast. If you want more examples of this, obviously you got to back test for yourself. The charts are going to teach you more than I ever could. But as always, this is not 100%, and you will lose some of these setups. You'll see this type of price action right here. You'll see this day and this day, and then this next candle on candle 3 will shoot straight up and just kill everybody who went short. You will see that, I promise. Okay. So when that happens, and it will, just set a stop loss. You'll be okay. What's the main reason you know that you're wrong? This high right here gets taken out. If any candle closes above this high on candle 2, just get out of the trade. I don't care if it comes back after that. To me, that's the main invalidation zone is candle 2's high or low. Okay, so that's that. Let's see. And then last but not least, I believe that you can be successful. But the main thing is, do you? Okay, I can believe it all day long. But if you don't believe it, it won't happen. But I know you can if you're consistent, if you can manage risk and keep the faith. So I appreciate you watching. Thank you for your time and attention, and have a great rest of your day. And take care.